I'm going to say this once, and I'm not going to soften it to make you feel comfortable. We are heading into a recession. Not someday, not as a maybe. It's coming. And before you roll your eyes, before you tell yourself, Kevin, the market's still green, my job is fine. My credit cards still work. Stop. Because that reaction right there is exactly how people get wiped out. Right now, everything looks fine. Stocks are still trading. People are still shopping. Restaurants are full. Airports are packed. Everyone is acting like the party is still going. And let me tell you something I've learned after decades in business. The most dangerous moment is when everyone believes nothing is wrong. That's when people stop paying attention. That's when they stop preparing. That's when they lose. You see the illusion, don't you? The market hasn't crashed yet, so you assume it won't. Your paycheck still hits your account, so you assume it always will. Your lifestyle hasn't been interrupted, so you assume it's sustainable. That's not confidence. That's denial with a nicer outfit. Here's the truth nobody likes to hear. Recessions don't announce themselves politely. They don't send you a calendar invite. They show up quietly then all at once. One day everything feels normal. The next day your neighbor is laid off. Then your company freezes hiring. Then suddenly people are restructuring, which is a polite word for panic. So let me be very clear. There are only two types of people watching me right now. Two, no third category. The first group prepares early. They get uncomfortable now so they don't get destroyed later. The second group keeps scrolling, keeps spending, keeps assuming tomorrow will look exactly like today. Those people become casualties. I don't say that to scare you. Fear is useless. Fear makes people freeze. What I'm doing is waking you up. I'm pulling the curtain back and showing you what's actually happening before the headlines do. Because 6 months from now, you will be in one of two places. You'll either say, I'm glad I listened, I'm ready, or you'll say, I didn't think it would happen this fast. So here's the question you need to answer right now, not later, not after this video ends. 6 months from today, when the pressure hits, when things start breaking, which side are you on? I'm not saying this because I read it in a headline this morning. I'm saying it because I've lived through it multiple times. I've been in business for over 40 years. I've built companies, sold companies, shut companies down, and watched people far smarter than they thought they were lose everything because they believed this time was different. It never is. Here's something you should understand about recessions. They don't announce themselves with flashing lights and dramatic music. They don't wait for the media to agree. By the time the newspapers start screaming the word recession, the damage is already done. That's when people panic. And panic is expensive. What actually comes first is behavior. Quiet, boring, easy-to-ignore behavior. That's where the warning signs live. And if you know where to look, they are impossible to miss. The first signal is consumer debt. When people are confident, they borrow a little. When people are scared but pretending they're not, they borrow a lot. Credit cards get maxed out. Car loans get longer and bigger. People finance lifestyles they can't afford because they're convinced tomorrow will save them. That's not optimism. That's desperation wearing a smile. The second signal is what businesses do behind the scenes, not what they say on earnings calls, not what their CEOs say on television with a forced grin. I'm talking about margins. When companies start cutting costs aggressively, freezing hiring, laying off, quietly squeezing every dollar out of operations that's not efficiency, that's survival mode. Healthy economies don't behave like that. Stressed ones do. And the third signal is the one most people never see because they're distracted by noise. I watch the money. Not what it says, what it does. Big money doesn't tweet. It doesn't make emotional speeches. It moves. And right now it's moving defensively. out of risk, into safety, into cash, into assets that don't make headlines but don't collapse either. That shift happens before recessions every single time, not after, before. Now here's where people get this wrong. They say, "Well, Kevin, if it's so obvious, why isn't everyone talking about it?" Simple answer. Because complacency feels better than preparation. Because cutting spending isn't fun. Because admitting risk means admitting you might be wrong. And ego is far more expensive than any market crash. The real danger isn't the recession itself. Recessions are normal. They are part of the cycle. The real danger is assuming you have more time than you do. That belief destroys people. It keeps them spending, borrowing, delaying, convincing themselves they'll act later. Later is where regret lives. I'm not telling you this to sound smart. I'm telling you because I've seen how this movie ends. The only variable is whether you recognize the pattern early or pretend you don't see it at all. Let me say something that sounds uncomfortable, even offensive to some people, but it happens to be true. Real wealth is almost never created during good times. Prosperity makes people lazy. It makes them sloppy. It convinces them they're geniuses. And that's usually right before they give it all back. When the economy is booming, everyone thinks they're smart. Your neighbor is a stock picker. Your cousin is a crypto expert. Your dog could start a hedge fund and people would invest in it. That's not skill. That's a rising tide. And rising tides hide a lot of bad decisions. Wealth is created in the opposite environment. It's created when things break, when prices fall, when people panic, when headlines scream disaster and everyone is running in the same direction, usually straight off a cliff. That's when the transfer happens, because a recession isn't the end of money. It's a transfer of money. From the impatient to the patient, from the emotional to the disciplined, from the unprepared to the prepared. Here's the brutal part. Most people experience a recession as pain. They sell at the bottom. They lock in losses. They liquidate because they have no choice. Not because it's smart, but because they're desperate. Bills don't wait. Debt doesn't care about your feelings. So they dump assets at the worst possible moment and call it bad luck. At the exact same time, another group is quietly buying. Not because they're fearless, because they planned for this. They have cash. They have flexibility. They're not watching prices fall in terror. They're watching prices fall like a clearance sale. Same market, same recession, completely different outcome. And this is where people love to lie to themselves. They say, nobody could have seen this coming. That's nonsense. The signs are always there. What people really mean is, I didn't want to change my lifestyle. Preparation is boring. It's inconvenient. It's saying no when everyone else is saying yes. That's why most people don't do it. Let me be very clear. You don't lose money because a recession happens. Recessions are normal. You lose money because you arrive unprepared, because you assumed growth was permanent, because you believed comfort was safety. Here's the line you need to remember because it cuts through every excuse. You are not poor because of a recession. You are poor because you didn't prepare for it. And if that stings a little good, that discomfort is the moment you either wake up or hit snooze and pay for it later. Now let's talk about the fear nobody wants to admit out loud. The real one. The question that wakes people up at 3 in the morning. What happens if you lose your job? Not in theory, not someday. What happens if it's tomorrow? Because when a recession hits, confidence disappears fast. Titles don't protect you. Loyalty doesn't protect you. Good intentions don't protect you. Cash does. That's why the first thing I build every single time is what I call a cash fortress. Not a cushion, not a safety net. A fortress, thick walls, no emotions, no excuses. Cash gives you control when everyone else is negotiating from weakness. Cash buys you time, and time during a downturn is power. Let me be very clear about the number because people love to pretend it's flexible. It's not. If you don't have at least 6 months of essential living expenses in cash or cash equivalents, you are exposed. That doesn't mean you're stupid. It means you're vulnerable. And recessions don't gently tap vulnerable people on the shoulder. They crush them. Cash is boring. It doesn't brag at dinner parties. It doesn't make you feel smart. People love to say cash is trash. That's a cute phrase during bull markets. During a crash, cash is king, queen, and the entire royal family. When assets drop 40% and you're the only one who can buy inflation, suddenly feels like a small price to pay for freedom. So, how do you build this fortress? You don't do it with motivation. You do it with discipline. You stop asking yourself, "Do I enjoy this?" and start asking a much more uncomfortable question. Is this necessary? Not emotionally necessary, not socially necessary, actually necessary. Go through your expenses line by line. Streaming services you barely watch. Gone. Subscriptions you forgot you had. Gone. Cars you bought to impress people who don't care. Gone or replaced with something cheaper. People hate this part. They say I'm being extreme. I'm not. I'm being realistic. Every dollar you save now is a soldier you can deploy later. This isn't about living like a monk. It's about refusing to live like a fool. Temporary discomfort beats permanent regret every single time. Now let's talk about debt, because this is where people destroy themselves quietly. Not all debt is evil. Cheap, manageable debt tied to assets you can afford is one thing. High-interest consumer debt is something else entirely. Credit cards, expensive car loans, personal loans with ugly rates. That kind of debt is a parasite. Here's the simple math nobody argues with once they understand it. If you're paying 20% interest on a credit card, paying it off is a guaranteed 20% return. Guaranteed. Try finding that in the market. You won't. So before you talk about investing, before you chase the next opportunity, kill the bad debt. Ruthlessly. Debt steals your options. When layoffs happen, the person drowning in payments can't wait. They can't negotiate. They can't take a risk or pass on a bad offer. They grab whatever they can get and call it survival. That's not freedom. That's financial servitude. I don't sugarcoat this because sugarcoating ruins people. The combination of cash and low debt is what gives you leverage. It's what lets you stay calm when others panic. It's what allows you to see opportunity instead of disaster. This is the foundation. Not investing tricks, not clever hacks. Control, liquidity, flexibility. If you get this part right, everything else becomes possible. If you skip it, everything else eventually collapses. You don't prepare for a recession when the storm arrives. You prepare when the sky still looks clear. That's what adults do. And if you want to stop fearing the question, "What if I lose my job?" this is how you answer it. Once you've built the foundation, once you have cash and control, fear starts to lose its grip. And that's when most people make a mistake. They think preparation is about hiding. It's not. Preparation is about positioning. This is where you stop playing defense and start thinking strategically. Let me say something that makes people uncomfortable. Relying on a single source of income is one of the riskiest decisions you can make, especially heading into a recession. Most people call a job security. It isn't. It's concentration risk. One employer, one paycheck, one decision you don't control. When that disappears, income doesn't decline gradually. It goes straight to zero. You don't need 10 income streams. You don't need 17. You just need more than one. That's the rule. 1 is fragile. 2 is resilient. Everything beyond that is leverage. The easiest place to start isn't some flashy investment. It's your skills. The ability to solve problems, generate revenue, reduce costs, or create value travels with you. Skills don't get laid off. They get rehired. If you can consult freelance advice or sell expertise, you have an income valve you can open when pressure hits. Most people wait until they're desperate to do this. That's backwards. You build it while things are calm. Next comes defensive income. Not exciting, not brag-worthy, but reliable. Businesses that sell things people need whether they're happy or scared. Food, utilities, healthcare, basic services. These don't explode upward in good times, but they don't implode either. In a downturn, boring becomes beautiful. Dividends keep paying while prices fall, and that income buys more shares at cheaper prices if you're disciplined enough not to panic. Now let's talk about investing strategy, because this is where emotion ruins returns. Most people do exactly the wrong thing at exactly the wrong time. They stay fully invested when risk is highest, then sell when fear peaks. That's not investing, that's self-sabotage. Before a recession, I reduce risk. I take profits where prices have run ahead of reality. I cut positions I'm not completely confident in. I move capital into assets that can survive stress. Not because I'm scared, but because I want flexibility. You can't buy opportunity if all your money is trapped. And when the panic arrives, when the headlines scream, "collapse," and everyone around you is frozen or dumping assets in terror, that's when strategy becomes action. Markets don't crash politely. They overshoot. Prices fall below value because fear doesn't do math. That's when disciplined investors step in. Not all at once, not guessing the bottom. Slowly, rationally, with cash they prepared in advance. That's the difference. Prepared people shop, unprepared people sell. Real estate deserves special attention here because recessions create generational opportunities for those who are ready. When people lose jobs and credit tightens, prices fall. Sellers get desperate. Financing becomes harder, and most people step aside because they're scared. That's exactly why opportunities exist. But let me be clear. Real estate in a downturn is not about speculation. It's about cash flow and patience. Rental properties bought at discounts with conservative assumptions. People still need a place to live in recessions, often more than before. Demand for rentals can increase while prices fall. That combination is powerful, but only if you have cash and discipline. No cash means no deals. No discipline means bad deals. Both are required. I've watched this cycle repeat over and over. The same complaints. I wish I had money when prices were low. I wish I hadn't sold. I wish I had acted sooner. Wishes are expensive. Preparation is cheaper. This is the moment where fear should transform into focus. You're not trying to predict exact dates or bottoms. You're building a system that works regardless of timing. Multiple income streams, defensive positioning, cash ready to deploy. A plan that doesn't depend on optimism. Recessions don't reward hope. They reward readiness. If you do this correctly, something interesting happens. While everyone else is stressed, you're calm. While others see chaos, you see discounts. While people complain about how unfair it all is, you're quietly improving your position. That's not luck. That's strategy. And this is the part nobody tells you. Confidence during a downturn doesn't come from courage, it comes from preparation. When you know your bills are covered, your debt is manageable, your income isn't dependent on a single paycheck, and your cash is ready, fear loses its power. That's when a recession stops being something that happens to you and starts being something you use. Let me leave you with the picture that actually matters. Not today, not next week, 6 months from now. There will be two versions of you walking around in that future. They'll look similar on the outside, but internally they couldn't be more different. One of them wakes up with a tight chest, replaying every warning they ignored. That version says things like, "I should have listened," or "I didn't think it would hit this hard," or my personal favorite, "Nobody could have seen this coming." That person is tired, stressed, and angry at the world, angry at the government, angry at their employer, angry at the economy. Everyone is to blame except the one person in the mirror. The other version of you wakes up calm, not euphoric, not celebrating, calm. Because they acted early. They cut expenses when it wasn't popular. They built cash when it felt boring. They reduced debt when others were upgrading their lifestyles. While people laughed, they prepared. And now, instead of panic, they feel gratitude. Not because life is perfect, but because they're in control. Here's the part that's uncomfortable, but necessary. No one is coming to save you, not the government, not your company, not some policy change, not a bailout with your name on it. Those are comforting stories people tell themselves so they can delay responsibility. Comfort is expensive. Responsibility is cheaper. Your employer will protect the business, not you. Governments will protect systems, not individuals. Markets will do what markets do. They don't care about your plans, your hopes, or your excuses. That's not cruel. That's reality. So this moment right now is the only one that matters, not because everything has collapsed yet, but because it hasn't. This is the window. This is when preparation still feels optional. Once it feels urgent, it's already late. I'm not asking you to panic. Panic is useless. I'm asking you to decide. Decide to be the person who acts when others hesitate. Decide to be slightly uncomfortable now instead of completely desperate later. Decide to take control instead of waiting for permission. 6 months from today, you will look back at this moment. That's guaranteed. The only unknown is what you'll feel. Gratitude or regret. So ask yourself the question honestly, without excuses, without optimism, bias, without the fantasy that you'll figure it out later. 6 months from now, when the pressure is real, will you thank yourself for acting today, or curse yourself for ignoring it? The difference between those two futures isn't luck. It's a decision. Make the right one.